Hey, how's it going, traders? In this video, I'm going to break down ticker symbol FUBO or Fubo stock. Now, it's my most recent swing trade that I really do like, that I think has a lot of upside potential, especially where it's at $23. So do we short it? Do we buy it? What do we do? So all that and more, coming right up. Now, giving a technical analysis on Fubo stock. Well, this one is fairly easy. Today it was up about 1% off of yesterday's lows, about 5% or so. Now, as you can see, buying it at $23 would have been a good buying opportunity because since then it's gone almost half a dollar share in a single day. Now, where are we buying? What's going to happen with Fubo in the short term? Well, if we zoom out to the 180-day simple moving average, this is the time frame that we study all of our swing trades on. Now, as you can see, in the last few weeks, it's had this descending resistance line, and it's been struggling to break it. Now, zooming out, there's a really good support at around $22.50. Now, I really think it's a good buying opportunity at that level, but what I'm watching is if it breaks this descending resistance line and starts making higher highs, I think it's a really good buying opportunity. But until then, I'm going to wait because this could very easily keep trending down, break below that support line, and I could buy it in the low 20s. So why not wait, and why not wait for some more confirmation? Now, obviously, I love this company long term and the stock long term, but I want to do my part in making sure I have the lowest dollar cost average when it comes to trading the stock. Now, if it means waiting for a week or so and maybe even buying at low 20s, maybe even below 20, that's a 10 or 20% gain that I wouldn't have had if I were to just buy right now. So now I'm going to go off camera and map my price targets, and then I'll come back and tell you guys why I decided to choose those prices to start selling some of my shares. So now I have my price targets mapped, and let's talk about price target 1. Now, if we go over to my screen, if I move it a little bit, you'll see that I labeled this price target 1. Now, the reason I did that is because, as you can see, this clearly was a good support line for the stock in the last few weeks. It kept bouncing off of this $25 support line 1, 2, 3, 4, 5 times in the matter of a week or so. So that's why I decided to choose it as my first price target, because what do we know about old support lines? Well, they can become really good resistance lines. Another term is the ceiling becomes the floor, meaning that this was once a very good support line, so breaking that would be harder to do now that this stock is below that support line. Now, heading on to price target 2, the $28.50 resistance line. As you can see in the last few weeks, it acted as a very good resistance line for the stock. It bounced off 1, 2, 3, 4, almost 5 times and then sold off pretty quickly. So we want to offload some of our shares at that resistance line because old resistance lines can still be new resistance lines, and we don't want to negate them just because it was an old one a few weeks ago. It still can be a good resistance line coming up. Now, price target 3, this one is fairly simple because it's the whole $30 resistance line. Now, it has broken above $30 quite a few times, and every time it does that, it quickly becomes overbought, like right here, right here, right here, and even right here. Every time it's since then sold off into the low 20s a few weeks later. So we want to make sure we do our part in selling above $30 because apparently that's a very overbought level for the stock, and not a lot of traders like to see it at that level, and they start selling some of their shares at those levels. So we want to make sure we sell our third price target at $30. So again, it's $25, $25.50 range, $28.50, and then $30. The reason we do that is because we average into our positions and average out. That's the best way to negate risk. It's the best way to lock in most profits as possible, and that's what my trading plan is when it comes to swing trading stocks like this. Now, I would love to talk about where I plan on cutting losses on the swing trade, but I haven't even bought in yet, so I don't know where my stop loss is going to be placed just yet. But what I do know is I want to see winning ratios, and what do I mean by that? So hypothetically speaking, if I plan on buying at $23.50, and I think it personally has a really good chance to get up to $26, $27, that's a 15% gain. And if we're doing a minimum 2-to-1 ratio, but I like to do at least a 3-to-1 ratio, I plan on cutting losses at negative 5%. So if I'm looking to gain 15%, I want to cut my losses at 5%, a 3-to-1 ratio. So every 3% we gain, we risk 1%. But hypothetically, I think it'll go much more than that, and if we go up to $30 a share, that's now a 30% gain. So where do I plan on cutting losses? At around negative 15% to negative 10%. Again, that's a 3-to-1 ratio if we cut losses at negative 10%. But like I said, I don't know what my average is yet because I have not bought in yet. So there you have it. There's my trading plan when it comes to ticker symbol FUBO and where I think it's headed in the short term. Hopefully you guys like my technical analysis. If you think you guys got something out of this video, please consider liking and subscribing because it helps the channel out immensely. But other than that, I will see you guys in the very next video.